Hello, good morning and welcome to a fantastic time to talk about business. It is Business 360 and my name is Vladimir Kim. On Business 360 this morning, oil climbs on Mid-East escalation. We begin from there. Oil prices extended gain today amid escalating hostilities in the Middle East. Multiplicity of conversation has been the mounting risks of a full shutdown in the Strait of Hormuz. When we talk about the concerns, tanker flow through the strait have effectively stalled amid heightened security risks, raising concerns about global supply. Well, looking at Amazon, Amazon says 3 data center damaged by drone strikes in Middle East. Amazon said 3 of its data centers in the Middle East were damaged by drone strikes due to the US-Iran conflict in the region. 2 facilities in the United Arab Emirates sustained direct hits, while a 3rd facility in Bahrain was damaged by drone strikes in close proximity. The company said in the updates on its AWS cloud service dashboard. Those strikes have caused structural damage, disrupted power delivery to infrastructure, and in some cases required fire suppression activities that resulted in additional water damage. The firm said they are working closely with local authorities and prioritizing the safety of personnel throughout the recovery efforts. Amazon said the situation remains unpredictable. In Africa, after years of disruption, South Africa lands $473 million investment from world's second largest miner. The world's second largest mining company, Rio Tinto, has approved a $473 million expansion of its South African mineral sand operation, marking a decisive step towards restoring stability after years of violent disruption and governance setback. The Zulti South project is a major vote of confidence in South Africa's mining sector following a period of violence and governance issues. With construction starting this quarter, expansion will secure operational continuity at the sites until around 2050, aiming commercial production by late 2028. The investment underscores the importance of community alignment and transparent governance following recent scrutiny over RBM's Empowerment Trust. As you're looking at the situation of Iran-US-Israel war, Nigerian petroleum marketers and retailers say the retail price of premium motor spirit will go up from today, Tuesday and Wednesday, 3rd and 4th March 2026. This followed Dangote Refinery's hike in the gantry price of petrol on Monday. The $20 billion refinery increased the fuel gantry price to 874 naira per litre due to the Iran-United States-Israel war, which triggered crude oil price hike. Amid the global crude oil price volatility, a Dangote refinery adjusted its domestic petrol at least 75 naira. As of Monday, a crude oil rose to $78.50 and $71.84 per barrel for Brent and West Texas Intermediate respectively. On the aspect of gas, Goldman Sachs said if the crisis in the Middle East persists, LNG to Europe and Asia may rise to $25 per million British thermal units. Retail fuel price stood at 870 naira and 899 naira per litre on Monday night. However, a manager at the Dangote-backed MRS filling station in Abuja said a new retail price would be implemented today. Reacting, the spokesperson of the Independent Petroleum Marketers Association of Nigeria, Chinedu Kadike, said retail petrol price would increase to as much as between 980 naira and 1,000 naira per litre from around 899 naira and 870 naira in the Federal Capital Territory and its environs. Still in Nigeria, the governor of the Central Bank of Nigeria, Olayemi Cardoso, has said Nigeria's net foreign exchange reserve rose sharply to $34.8 billion at the end of 2025, representing a 772% increase from $3.99 billion recorded at the end of 2023, and signaling what he described as a significant strengthening in the country's external buffers. In a press statement issued by the CBN, the Apex Bank said the improvement in both gross and net reserves reflected stronger external sector fundamentals and sustained policy reforms. Gross reserves refer to the total stock of foreign currencies, gold, and other external assets. Net reserves, however, strip out short-term liabilities and obligations, providing a clearer picture of the portion of reserves that is readily available to defend the naira and meet external commitments. Cardoso had earlier disclosed at a post-monetary policy committee briefing on February 24, 2026, that Nigeria's gross external reserves stood at $50.45 billion as of February 16, 2026. Providing further clarity over the weekend, he said the net foreign exchange reserves as of the end of December 2025 rose to $34.8 billion. Still in Nigeria, the Nigerian government has commenced the implementation of Executive Order 9 on direct or revenue remittance to the Federation accounts. The announcement, according to reports, was made on Monday by Minister of Finance and Coordinating Minister of the Economy, Wale Ejin, who also chairs the Implementation Committee for the Executive Order. The committee held its inaugural meeting on February 26, 2026 to set the framework for reforms directed by President Bola Tinubu. Under the reforms, the Nigerian National Petroleum Company Limited, NNPCL, has been instructed to stop collecting the 30% management fee and the 30% frontier exploration fund deduction from profit oil and profit gas under production sharing contracts, PSCs. Remittances of gas, the gas flare penalties into the midstream and downstream gas infrastructure fund have also been suspended with immediate effects. Under direct payment by contractors into the Federation's account, Edwin explained the transition will be carefully managed to respect existing contractual and financing obligations. Contractors will continue remitting under the current framework until detailed guidelines are issued. Multiplicity of observations shows a technical subcommittee has been set up to develop comprehensive guidelines for the transition within 3 weeks. Still in Nigeria, federal government splits OPL 245 after decades of disputes. The federal government has broken up the controversial OPL 245 oil block into 4 new assets to be operated by Eni and Shell, in a move that could finally unlock one of Nigeria's largest untapped deep water reserves after nearly 3 decades of legal and political disputes. According to reports, the restructuring effectively clears the path for the long-delayed development of OPL 245, a field widely regarded as one of Nigeria's most prolific offshore assets. The block has remained idle amid overlapping lawsuits and investigations spanning Nigeria, Italy, and other jurisdictions. According to sources, a final agreement for the restructured assets are expected to be signed beginning Monday. Meanwhile, the House of Representatives on Monday held a public hearing on a bill seeking to establish the Nigerian Fintech the Regulatory Commission (NFRC), as an independent body to license, regulate, and supervise fintech operators across the country. The hearing was organized by the Committees on Digital and Electronic Banking, Banking Regulation, Science and Technology Communication, and Capital Market and Institutions. Sponsor of the bill, Honorable Ford Kade Lagoda, has said the proposed commission would address the fragmented regulatory structure currently governing Nigeria's fast-growing fintech sector. He noted that fintech companies are presently regulated by multiple agencies including the Central Bank of Nigeria, Securities and Exchange Commission (SEC), National Information Technology Development Agency (NITDA), a National Office for Technology Acquisition and Promotion (NOTAP), and the Federal Inland Revenue Service (FIRS). According to him, the absence of a single regulatory authority has created compliance challenges and uncertainties for operators and investors. And now we'll go on a quick break, and when we're back, Business 360 continues as you're looking at Nigeria's perspective and global economic standings around the world alongside the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir Kim. As you're from the context of Nigeria's energy tycoon Tunde Afolabi's AMNI targets 12,000 barrels per day at Okoro as offshore campaign begins. AMNI International Petroleum and Development Company has moved a drilling rig to the Okoro offshore field in Nigeria, beginning a three-well campaign aimed at raising output to more than 12,000 barrels of oil a day. The company described the rig's arrival as a major step in its wider plan to boost production from existing assets and strengthen its position among leading indigenous operators. Multiplicity of observations indicated APNI has mobilized a drilling rig to the Okoro offshore field in Nigeria for a three-well campaign, as stated. The company aims to lift a peak production above 12,000 barrels a day as part of its 5-year development plan. Chairman and energy tycoon Tunde Afolabi says the program reflects a long-term investment and growing local capacity. The move highlights the rising role of indigenous operators in Nigeria's push to increase national oil output. Up next is Global Economic Outlook. On Global Economic Outlook, Japan jobless rate is highest in 1.5 years. Japan's unemployment rate was at 2.7% in January 2026, edging higher from figures in the prior 5-month and market forecast of 2.6% and marking the highest level since July 2024. The number of unemployed grew by 60,000 to a 4-year high of 1.91 million. Meanwhile, employment fell by 290,000 to 68.17 million, while the labor force dropped 210,000 to a 5-month low of 70.08 million. The number of people outside the labor force increased by 170,000 to a 4-month high of 39.45 million. On a non-seasonally adjusted basis, the labor force participation rate increased to 63.5%, down from 63.9% in December, but up from 63.2% a year earlier. Meanwhile, the jobs to applicant ratio stood at 1.18 compared with December's reading and estimates of 1.19. Back to Nigeria, Nigeria's private sector returned to growth in February as new orders increased and inflationary pressures eased. According to the latest Purchasing Managers Index report released by Stanbic IBTC Bank, the headline Purchasing Managers Index rose to 53.2 in February from 49.7 in January, moving above the 50 threshold that signals improvement in business conditions. The February reading indicates a solid monthly recovery in the health of the private sector after a brief dip at the start of the year. The report showed that new orders returned to growth, supported by improved customer demand and better product affordability. Output also regained momentum, rising at the fastest pace in 4 months. All 4 monitored sectors recorded high activity, with wholesale and retail rebounding after a decline in January. Employment increased in Nigeria for the 9th consecutive month, with staffing levels rising at the fastest pace since October last year. However, despite continued hiring, backlogs of work grew at the sharpest rate since May 2020. Companies linked to the rise in outstanding businesses to delayed customer payment, staff shortages, material supply challenges, and power outages. And now, let's look at the markets. And now to the markets as coal climbs on Qatar LNG disruption. A coal prices surged more than 8% to around $128 per ton, hitting the highest level since December 2024 after a rail shutdown at Qatar's liquefied natural gas facility, a boosted demand for fuel switching in the power sector. The move follows an Iranian drone strike on Qatar's main LNG export hub, highlighting escalating tensions in the Middle East. The facility, which supplies about 20% of global LNG, had never fully halted operation in its 30-year history. With many Asian economies relying on Qatari LNG, Taiwan indicated it may ramp up coal-fired power generation if the disruption persists. Meanwhile, expectation of strong global demand outweighed the shift towards cleaner energy, with China, the world's largest coal producer and consumer, adding new coal-fired capacity to maintain energy security and grid stability. And now to the markets. The energy market first, afterwards the metal market and agricultural markets. The energy markets. Energy market begins with the price of crude oil, a U.S. crude, a price level standing at $75 per barrel, gaining 3.8 a point, a 5.34% appreciation. But on a weekly basis, U.S. crude has gained 14.32%, all inclusive amid the wars. Brent, which represents Nigeria's price benchmark, a price level stands at $81 per barrel, gaining 4.124 points, a 5.3% appreciation, and on a weekly basis, 15.69% appreciation. The price of crude oil going up. And now to the metals. Metal commodities. Let's look at the metal commodities and the structure that comes with the metal market, which reflects the price of gold. The metal commodities. The price of gold stands at $5,266 per ounce, falling 56 points this morning, a negative 1.06% decline on a weekly basis, is quite positive. A silver price at $84 per ounce, falling 5.102 points this morning. A copper price also falling, steel price gaining 15 points, a lithium falling 11,500 points. And now to agricultural commodities. Agricultural commodities begins with a price of soybeans. Soybeans at $1,161 per bushel, upward by 11.99 points, a 1.04% appreciation. A wheat price at $576 per bushel, upward 2 points this morning, a 0.36% appreciation. A lumber, no significant difference, but falling a negative 0.54%. Palm oil price gaining 2.52%, and the price of palm oil is 4,148 Malaysian ringgit per ton. Quickly, let's look at the financial market as Naira strengthens as reserves near $51 billion. Nigeria's currency market ended February on a cautiously optimistic note, with the Naira closing at 1,368 Naira per dollar in the official window, marking a modest month-on-month appreciation and reinforcing growing confidence around the country's external position. Data from the Central Bank of Nigeria (CBN) showed that the Naira strengthened from an opening rate of 1,384 Naira per dollar at the beginning of February to 1,368 Naira 5 kobo per dollar at the month end. And while the currency experienced some volatility in the final trading session, the overall trajectory signaled improved fundamentals underpinned by stronger foreign exchange liquidity and rising external reserves, now approaching the Apex Bank's $51 billion target. Nigeria's gross external reserves climbed to approximately $49.5 billion as of February 25th, edging closer to the CBN's projected $51.04 billion year-end target for 2026. Earlier in the month, reserves had already crossed the $50 billion mark, reaching $50.45 billion as confirmed by CBN Governor Olayemi Cardoso. The current reserve level represents the highest in about 13 years and is sufficient to cover more than 15 months of import, a significant improvement from the fragile buffers recorded during the height of the currency crisis. Quickly, let's look at the US dollar against the Naira market this morning, what a performance of the Naira is, and afterwards we'll talk about a cryptocurrency and the Euro USD market. The US dollar against the Naira. The cryptocurrency market. With the Euro USD market, and afterwards look at the state of the Naira. The Euro USD market price level stands at 1.16 US dollar, equaling €1. The euro falling against the dollar, negative 0.68%, and the pound against the US dollar at 1.32 US dollar, equaling £1. The pound also falling against the US dollar. Let's look at the state of the Naira as we set to close. The US dollar against the Naira and the cryptocurrency market. A cryptocurrency market indicates the price of Bitcoin. A price of Bitcoin at 66,578 US dollar are falling. A Bitcoin falling 2,206 points and 83.21%. Ether on the other hand, 1,951 US dollar for one Ether. Ether dropping 76 points this morning, a negative 3.76%. Binance also falling, a negative 2.36%. Cardano, Solana, Ripple, all negative. It seemed to be a total negativity for the crypto market this morning. Let's conclude with the African stock market and see the perspective from the stock market this morning as we close. African stock market indicates the price of the Nigerian stock exchange, a price level standing at 195,537 index point, where the Nigerian stock market is on a positive, gaining 23 basis points this morning, 0.01%, not massive anyway. The South African stock market has fallen by 4,444 points this morning. Similarly, another South African stocks, SA40 dropping 4,299 basis points. Egyptian stocks, EGX 30 also dropping 1,301 basis points. It's been a story of the African stock market that seemed to be on the negative amid the concerns in the global economy. Well, it's the much we can take when it has to do with business this morning. Thank you for being a part of it. My name is Bladun Kim, and thank you for watching.